Hello, everybody. My name is Drew Dosek, and welcome to Trading the Close. Today, we had the 20-year bond auction data released at 1 o'clock, and that shook markets. Apparently, U.S. debt is not as attractive as it once was, so the markets and almost everything began to fall pretty dramatically, too. But we've had a late day, little pop in the rally. A lot of data to go through. So let's just jump straight into the heat map and take a look at what's going on here on the screen. All right, so you see here that we've got Dow Jones down 1.79%, NASDAQ down 1.23%. We have the S&P 500 down 1.48%. U.S. oil is also down 1.49%. Gold had a nice rebound today, up 0.89%. Bitcoin also touched brand new all-time intraday highs, just over $109,000 before retreating and now bouncing back up just slightly. Look over on the right-hand side. There is everything on the screen is in red except for this major outlier. Google up 3.26%. Google is still putting in bullish consolidation on the daily chart. We're going to highlight that here in a few moments. All right, so into the spiders we go. And I've been mentioning with this huge move up that we've had since the bottom in April that we likely need to cool off. We need to have some sort of pullback, and there's not been really any pullback along this whole stretch. Well, finally, we got that today. And where did we catch support? Just above this declining parallel channel. We'll jump into the 10-minute to show you that price action. And here today, just like many of the previous days, if you notice here, we gapped down, went higher. We gapped down, tried to go higher, ended up finishing lower on the day. We gapped down again. This almost was looking like a repeat of what occurred over here on Monday. We gapped down and we're excelling back higher. Never quite got to the flat line. And then here at 1250, news must have been released just a little bit early for those investors on that 20-year bond auction, because as you see here, boom, to the downside, all the way down, then falling even more and then bouncing slightly up at the end of the day. So back to the daily to give an idea about where we're going to be going from here. There's a couple of options of what can happen. If we do gap lower tomorrow and break through this trend line, because in essence, this trend line now, this top end of the parallel was kissed. So that area will not have as much support. The next area I'm looking for is 575.46. Otherwise, if we continue to chop in this area, that all will still be positive for the markets. As long as we can stay above this declining parallel channel, that should help the markets stay afloat. Into the Qs. The Qs here still maintaining bullish consolidation. Now, this wasn't the best of days for the Qs. Qs actually were stronger than the S&P 500. If you look at the 10-minute, we actually did get up above gap fill today. We closed here yesterday, gap down today, moved much higher throughout the day. So tech was relatively strong for the day. That's also keeping the price action on the Qs up higher on the charts. Immediate resistance at 525.03 should the markets continue to fall, which would be healthy too. Keep in mind, a nice ebb and flow of the markets is healthy for a continued move up. But if they do fall, 493.46 is where I'm watching for the Qs. Into SMH. Now, SMH still is maintaining this bull flag pattern. However, now there is a check mark against it as we are starting to close beneath this inclining trend line here. Ideally, for any bulls in SMH, you would want to have seen price to maintain above here. And SMH tried so hard to do so, but did not accomplish that feat today. First support on it's going to be down here at 232.37. Followed by this 215.65 if we get a big sell-off on the SMH. Into the IWM, we highlighted this fact yesterday. Now, for anybody that does know technical analysis, hitting these trend lines with a certain number of times implies different things. For example, if price hits it a third time, it would mean something. If it would hit the fourth time, it would mean something different. Here, we see here with a third hits usually get the strongest kickback result. And that's exactly what happened, even though we had bullish consolidation going into that trend line. So I was anticipating with this bullish consolidation, maybe even a curl over or maybe a gap above if we had good news, but not today. We gapped lower and then continued selling off on the IWM. So that's negating this bull flag pattern at the current time. First support's going to be right here along these pivots, which also coincides with this gap fill on the SMH right around $200. Into Bitcoin, as I said, reaching all new intraday highs. Fantastic achievement here for Bitcoin. Can we push higher? Can we push up above the all-time highs and close above that level? If we do that, off to the races we go, up to 116,000 on Bitcoin. Be watching today's close tonight at 8 o'clock Eastern to see where that figure is, and that will help guide us. Either we're headed a little bit lower or we may be headed higher in the very near term. Obviously, we'll touch base on that tomorrow too. Into gold. Now, gold had a very nice move up today, negating this bearish pattern that we have here on the chart, this bear flag near term. However, we're now really trading in a wedge on top of this blue parallel channel. Now, one thing that I have in my mind that's making me believe gold will likely not go reach new all-time highs in the near future. We have a daily topping tail, plus we've got a weekly topping tail. Whenever you have both of those time frames aligning with such a strong negative signal on the charts, it's really hard to overcome them in the very near term. That would also show, if gold does overcome this topping tail, that gold is still very strong in demand. So we'll derive information either which way it goes, but the likelihood of price going up into this trend line and getting rejected, much like we saw on the IWM chart, is a very high probability. So right now, that trend line for resistance is 33.70. All right, into silver. Silver had a breakout day, as you can see now, confirming this breakout above this declining trend line. Fantastic news for those holding silver and those bulls in silver. Right now, we are currently into resistance as we speak. We'll see if we start to chop sideways, maybe even have a small pullback before moving higher. Next resistance will then be this pivot top right around $34.58. Followed by 34.86. But as long as price remains above this declining trend line, we're likely going all the way up here to $38.97 on the charts. Into U.S. oil. U.S. oil continues to struggle in this area, but all the while now we've tested it so many times. This area is weak. This trend line is weak, yet it still holds price down. We'll see in the coming days if we're able to get back above and close and confirm. If so, then we'll start moving up higher here to 65.64, followed by this inclining trend line right around $70. Into nat gas. Nat gas yesterday, as we noted, had a big monumental break back up into this wedge pattern that's on the chart. So far today, it was basically a cool-off day. Where did we come down to at the low? This trend line. It's amazing in technical analysis how when you have good trend lines, they can get tagged over and over and over again. Even though they may become weaker, there's still significant areas on the charts to pay attention to. Into the news of the day, the 10-year yield. Now, guys, this concerns me. This concerns me a lot because this trigger, this inverse head and shoulders pattern that is now triggered on the 10-year yield, should send the yield up higher, and not by a little bit, by quite a bit. So this will really hurt the economy. Investors are certainly paying attention to this. Every tick up on the 10-year yield we had today saw selling pressure in the market. So pay attention to the 10-year yield. If we do confirm tomorrow right here on the charts and move up higher, this could spell bad news for investors in the near to midterm. But all the while, this could just be a simple test candle, and we might come down over the following days and then break down underneath there, which would negate that breakout for the inverse head and shoulders. Pay close attention to the 10-year yield in the near term. Should this confirm, as I mentioned on previous shows, we're headed all the way up here to 5.289% on the 10-year. Into Wolf. Wolf, they had a report yesterday in the Wall Street Journal saying that they potentially are going to be filing for bankruptcy. Now, Wolf was supposed to be the recipient of a lot of funds for the CHIPS Act, which got canceled during this administration. So when they did get canceled, news of it broke here at the end of March. Price on this stock dropped dramatically, creating this low pivot that we see here. All I did today, awesome stuff here too, guys. Technical analysis wins the day again. Gareth took a fantastic trade on this stock today in the live day trading room, and I'll show you why and how we did it. So straight back into the charts, look here on this low pivot, connected to those low pivots right down here. Create a trend line, string that down, get the most significant near-term pivot, which is right here. Make sure price lines up with it, and then price literally almost to a dime and really to a penny, stopped right here on that trend line. Now it pierced just slightly, but look at that bounce and move on Wolf. Price here at the lows of the day was at 82 cents, now finishing up at $1.28 on the day. Post market falling down about 5 cents, but still to the close of the day, that's a 55% move, guys. Incredible move on a company that's certainly surrounded with negative news. Now, for anybody interested in holding this stock for the long term, keep in mind this is almost like an options play. If you do want to hold this, good news is the price of you holding that stock is not going to expire. However, if Wolf does file for bankruptcy, you could see all of those funds really be wiped out because the stock would then be delisted. So be careful. But if there's any whiff of good news, should this administration change their minds and allocate funds to US-based companies, much like Wolf, for building microchips in the future, Wolf would rocket, much like what you saw today, 55% plus gains on this stock. So just be careful. It's a risky one. So if you're going to play it, go light. Into Target. Now, Target reported earnings. They did also report that their fiscal year is being reduced. But then the CEO also stepped in and said that they will not be increasing costs due to tariffs, something that will be really good for the consumer. And then we'll see in the long run if their margins get really hurt and then further put pressure on the stock price here. But as you know, here we did fall down $5.11, down 5.21% for the day. However, prices finished right in the middle of the trading action. So I bring your attention to this declining trend line that I have right here from this major pivot in October of 2023 down here to the most recent lows. And then I'll string back on the chart. You can see I've got a horizontal trend line that's from the high pivot place in June of 2015. This area, in essence, is creating a cradle for price action here on Target. Should Target continue to fall, I really do like this area, which currently, as I said, is right around this trend line at $85.81 for a long play on Target. Again, this stock has really been walloped in the most recent past, and I think the end for it will be coming pretty soon. Into Google. Google, this is one of the strongest mega caps today. Now, note, though, it had a great day before the announcement of the 20-year bonds. We see here right on the charts, right at 1250 going into 1 o'clock. Right here, that's when the price started falling on Google, getting back under this parallel channel that it fought so hard to get back into. And notice here the pause right for about 30-40 minutes before getting into that parallel channel. That's a significant area. Even when price fell back down, price tried to fight to get back into that parallel. Unfortunately, did not have that happen today. But all the while, that's a very strong move on Google in the near term. So this first resistance level is gone. And now the next resistance I'm looking for on a move up for Google is 175.95. Should this pattern fail, we could actually be coming all the way back down here to 146.61. All the while, this is still exerting some very good positive sentiment for the stock of Google. Into Tesla. Tesla did have one of the worst days in the mega cap department. However, look, it's still chopping around with bullish consolidation. All this price action isn't the best, but it's actually not that bad. So watch Google over the coming days. If we do put in 2 or 3 more days of bullish consolidation chop in this area, the likelihood then shifts for us to move up and tag this 383.76. If this pattern fails, first support's going to be right under $300 at $298.14. Into another stock in the mega cap sector that did have some significant pressure was Apple. Now, Apple bounced back up slightly at the end of the day. However, we're not showing the same bull consolidation pattern like we're seeing on both Tesla and Google on the Apple chart, showing that this stock has got more pressure under it and less relative strength. So that tells me the likelihood of Apple continuing lower in the future is actually higher than going back up. So the first support I'm watching is 197.68. It's in essence right in between these 2 days of gap fills. That area is broken. This trend line, that's a declining trend line, will then catch support right around 192.43. Into UNH. Now, UNH has been in the news for a number of different reasons recently. However, today they came out and apparently have some fraud investigations because UNH was apparently paying nursing homes to keep those patients in the nursing homes rather than getting them back in the hospital where they belong, which is a big no-no in the health department. So with price action coming down, this will give investors, and believe me too, this is one of those things that's tough about swing trading. Whenever there's a lot of negative news, it may make you afraid and want to not get into a play because you will be thinking, well, the end's not over. It's going to keep going down. But usually when all the negative news accumulates, that could signal the bottom. So you have to be a robot, get rid of the emotions, understand how to read charts so you can find levels to get into without worrying about what could or what could not happen. You just need to read what the charts are going to tell you to do. So back into the charts, we have a bottoming tail right here. I've said before, basically, if price action gets underneath this inclining trend line, currently at $290, this zone from the 50% retrace of this bottoming tail, which is at 262.76, up to this trend line right around 290, that area should be a good accumulation area for a long play on UNH. Good play for this would be if price action closes beneath this bottoming tail, just go ahead and stop out. So that lowers your risk reward. Or if you go lighter, you can just add at the next support area and wait for the bounce because the divergence has been taking place here on the charts. The UNH chart, all the signals I'm seeing technically are telling me we will be in store for a bounce in the near term, especially if price comes down into those levels. All right, that wraps up Trading the Close, guys. My name's Drew Dosek. Follow me on X at Drew Dosek. Thank you so much for tuning in. Enjoy a short word from our sponsors, but until then, I'll see you guys tomorrow. All righty, take care.
Hey guys, Lawton here with Verified Investing, here to talk to you a little bit about Blofin, our preferred crypto exchange. It's the only crypto exchange we've ever partnered with and the only thing we use when we're trading. You can watch us day trade crypto live and everything is through Blofin. And I want to tell you a little bit about the different collaborations we have with Blofin. This past weekend, we just finished up a campaign where we matched up to $500 for new members. So that means if you signed up and put $500 in, we gave you $500 in free futures trades. Of course, it's non-withdrawable, but the profits definitely are. Let's take a look at the computer and let's see what's going on in the crypto markets today. So taking a look here, you know, my favorite thing about Blofin is that it's integrated with TradingView. Everything looks the same as it would on my computer. And you see I have this nice upsloping trend line and I'm looking for a short on Bitcoin. For me, just looking at this chart, maybe I'll look to short it around 2% higher, closer to that 99,000 level. But by the time you see this, I might be totally wrong or totally right. But anyways, thank you so much for watching. Thank you to Blofin for working with us, and I hope you guys have a great day.